People get up every day, they do the same thing. They tell themselves they're going to change their life one day, and they never do. I'm going to change mine.
guys. Let's check out what's going on here. All right, let's check this out. Let's check out what's happening this week here in the charts. And most importantly, kind of where I see is heading for the whole month of March. So this is going to be a big call. We're going to go over a ton of things here. We're going to go over essentially, you know, give me 1 second. We're going to go over what specifically I'm looking at for this month. Also, what I probably will start diving into. So let's get this going here. First call of the month, always the most important here. So let's take a look at what I'm looking at. Okay, ISM manufacturing earlier today came out better than expected. That's actually really good for markets. So we were bullish today. No bearish news. Let's take a look at what we have going on for tomorrow. Nothing crazy. GDP, annual report, ADP non-farm employment change better than expected. This should make markets go up. Okay, this right here, if the news is over 50K, markets are going to move to the upside. But right now the markets are already pricing in the ADP non-farm employment change already, that this week we're going to have a good week. We're going to have a bullish week in markets. I get that the war in Iran that just started might obviously affect us here. Now, I'm not necessarily too concerned. The reason being is because right now, for what I've seen, the war hasn't necessarily escalated further than what we saw over the weekend. And because of that, and because the leader was eliminated within less than a day, I don't see further escalation unless the people start to revolt in Iran. We're going to go over the Iran war. We're going to take a look at that news here because, you know, the consequences potentially of some extremist groups towards America could definitely affect markets as well. But that's like a black swan event and it throws all fundamentals out of the picture. But for right now, at least, like what we're looking at with ADP non-farm employment change, we're looking at a good week in markets. Okay. Let's take a look. Also, Wednesday, we have ISM PMI better than expected. Neutral, still above 50, which is good. Still bullish, but not as good as expected. Obviously, if the news comes out better, we're going to see some sort of move to the upside. Unemployment claims coming out a little bit higher than expectations than last month, but not too crazy. Somewhat neutral news here. It's not going to affect price ridiculously. This right here is probably the issue. And this is probably going to make markets go haywire. So average hourly earnings are okay. Core retail sales month over month, neutral, 0. Wow, it's actually not good at all. So release date delayed by 17 days due to US government shutdown. So what is this? The data from, when is this data from? What specific day? Sometime in February here. The real thing that we need to take a look at, that's probably the most important, that everybody needs to be aware of, is NFP. And last month, being better than expected, even with news being better than expected, we saw a lot of neutrality in markets. You know, last month, NFP being better than expected at 130 should have actually created a massive rally in markets. And it actually didn't. It created a fall here. Which is interesting because in a recession fearing sentiment, usually, what does that mean? Usually the better the news report, the higher we go. Now, my only assumption can be here is that conditions are changing where the market is more concerned about rate cuts than anything else. We do have 2 rate cuts this year, the final year of rate cuts. Then we're going to start hiking, which essentially means that next year we're prone to having more of a recession type of style event. Now, what we can do here is take a look at specifically what can happen here, because anything at below 100 is bad for markets normally. Now, what this can do is it can create a temporary pullback for then what? An extension to the upside. And the only reason we would get an extension is if this news report is really bad, 59K, it would cause panic. But it would also, you know what it would do? Probably get us closer to a rate cut, right? The closer we get to a rate cut, the better it is for markets, you know? So maybe it would push us closer to a rate cut in April or even June than potentially July. And strategically, the Federal Reserve actually put this in one of the slowest months. July is a very slow month when it comes to markets and making money, money making like activities like in markets. Usually there's a slowdown in July. So it's smart to put a rate cut to create some injection of borrowing debt. And then also it's very, very intricate that they did it in December, because that's when things start to slow down. And that would be the last rate cut. Then we have a pause, but a pause would create a pullback in all markets unless we start printing money. Now, what I think is very interesting here is to go back to this. I believe this will create a pullback and then an extension to the upside. Retail sales was negative news. Unemployment rate neutral. We need over 60K for markets to be bullish, or at least over 100K for markets to be bullish. If we get something like that, like we did before in February, markets will start to move to the upside here. If not, we're probably going to move lower. Now, we've been in this, how could I say, back and forth range with the S&P since December 18th. There's been very little grow. It's been kind of just order flow and moving back and forth, right? Right now, the primary area that I'm looking at is just daily structure. We did break this daily structure here. We haven't seen anything yet. Now, technically, based off this impulse move on the daily, this is bearish. This move here is a bearish movement. But we've been in this channel here. And one thing I want to take a look at is ES here on the daily. Just to make sure it looks the same. Technically, with SPX being bearish, it would signify that, you know? I personally, guys, I'll be honest with you, I hate how this looks, to be brutally honest. Because you have breaks of structure. Technically, this is a break of structure. Even now, as we're heading downward. Technically, this thing could shoot downward. And I personally like trading the decisional areas. So for right now, what is my assumption, or what's my thoughts here with SPX? I can only take a look at Dixie. And with Dixie, huge external selling pressure right here. Huge. This right here is going to push us down, only for us to have a fill and extend to the upside even more. We need to target these highs. This high here needs to be taken out. This specific high needs to be taken out. Like I've kind of broken down over here. So we'll have a rally with SPX, but most likely we'll have a temporary rally and then a pullback as Dixie continues on its upwards trend. I do want to see now if Dixie does this, if Dixie breaks structure here, shockingly, in a shocking turn of events, I will change my bias here. But the only reason I'm a little bit more bullish on Dixie is for the sole fact that we're in this war with Iran. And the war with Iran it just kind of it doesn't scare me. That scare is not the right word. It just makes me more cautious. Because who's to say they don't create a false flag attack and attack America? You know, America's very vulnerable right now. You know, so like who's to say, you know, larger strikes as the US urges Americans to depart the region. You see what I'm saying? So like if Trump is saying this and this is being reported, you know, at 8 o'clock, that we're just getting started, you know, so this is where things can kind of get crazy here. So because of this, I want to be bearish on Dixie. I do. I really do want to. I want a bull run here. Because if we're bearish on Dixie, everything else is going to move to the upside, right? But it's very hard for me to justify being bearish on Dixie if there's a full-blown war going on. It really is really hard for me to justify. You know, even though historically in March, Dixie tends to what? Dixie tends to be bearish in a very great manner. You know, March and April, it tends to be bearish, which is the most bearish months for Dixie. You know, specifically April, if we want to be exact. Now, if it's that great, yeah, that's amazing. You know, because it's somewhat bearish here. But we just started March, so that doesn't mean that we're gonna go full-blown bearish here. You know, the most we've ever had was in 2016, 10 years ago, at minus 3.7%. Volatility is high though. So I really want to be like it, like, because obviously, guys, I'm trading, you know, my money like as well. I'm trading, making 1,000 to 2,000 a day trading. So I'm trying to think on like if I was trading, let's say $1 million here, what would my long-term play be? And you know, normally March is known historically for bearish, a bearish move. Now my prediction is this. My prediction is we'll probably move down, maybe have one more swipe of liquidity to the upside, and then we'll have a fall for the rest of the month. That one more swipe of liquidity to the upside will be some type of attack from Iran or something like that, or some type of hysteria that happens this month. If it's real or if it's not real really does matter. I'm sorry, guys, being interrupted here. Because then after that, we can start our fall here. That's what I want to see. I want to see this move downward here. Okay. You see that correlation here between last year and 2017? We have a very similar thing going on here. That would be great. We get one more swipe and then a move to the downside, because then we'll get assets to start moving, right? So my prediction would be, even now, we have SPX come back. Hopefully we don't have a massive sell-off here, even though it's at a selling zone. Here. But hopefully with SPX tomorrow specifically, we get some sort of small buy here. Internal buy. And there's lower volatility than normal. And a lot of this can also be boiled back down to, let's say, what's going on with back and forth movement with Russell. You see that? Ugly. Super ugly. Back and forth movement with Nah, same thing. Ugly. So my only theory would be this. We will sell off till tomorrow morning. News is going to play a big role. We could potentially search for a buying opportunity tomorrow. I don't want to be bearish on SPX specifically because the dollar index historically is the most bearish it is, which means that is historically bullish for SPX and all assets. The problem is, guys, we're at like, technically this is like, people are calling this Armageddon. You know, technically this is like biblical. When we attack Iran, like it's supposed to cause World War III. I don't know if people are exaggerating or not. They might be. So because of that reason, I don't want to call buys here completely, because what if we get striked at, you know? I don't want you guys to get screwed here. So that is a very big component to it all, to be brutally honest. The funny part about structure though is that market isn't breaking like daily structure. The VIX is going higher. Volatility is moving, but it's probably because of fear. Gold volatility is about to take off, I think, again, which it does need to fill here, here, and here. So I am bullish on gold. And that's the good part. Yields are going up again. It looks like yields are about to break structure. Are they breaking structure? No, not yet. We need to see. Yeah, no. A break here for sure, but no break on. When yields go down, that means bonds go up. What does that mean? People are fearful. People are fearful. When people are fearful, usually that means what? They dump their money into bonds. Now, we haven't broken the absolute low. But there's a lot of people fearful. Isn't it crazy that I called us to go back at this top here, back down here and back here? I've been calling gold buys since this fall. Interestingly enough, you know, even calling gold buys here. Last week I called a buy here, called another buy here. Even today, this morning, guys, I bought gold again at this wick. I saw this indecision here, and I called it. Where do I see us going? If we don't mitigate here, I see us moving to the upside, like right here. Now, this did break. You see that? This is a BOS. So what does that mean? We're 100% bullish. We're 100% bullish. Okay. What does that most likely mean for external? That means our next target area is going to be these highs. Probably like right here. So just off of today's, that'll make me, I'm up currently about almost $2,000. So that'll make me an extra, probably 6-7K, maybe 8 if it hits this high. Now, before there's a pullback, I need to be aware of that. What I'm really looking for here is a pullback during New York. That's what we're going to look for. That pullback's going to come here. Most likely. It's going to mitigate during London. Now, we do need to be a little bit careful here because this will pull back. Probably come back to the 50%, and I'm going to get more entries in here tomorrow morning. So we will trade this tomorrow morning for some buys. And we are going to target specifically the high, which would be here, 5,600. But most importantly, take away the high. I am going to take some good, decent profits like here. Right into 1.62. Then you'll probably see a huge institutional sell. I will stack orders. So what do I mean by that? I will continue to keep stacking. Stack 2 orders here. Stack to the upside. Just like I have been. It filled in this gap perfectly today. Wow, what a freaking buy today. Beautiful, beautiful buy today. Let's look at CAD here. Interestingly enough, CAD, sell side here, sold off, then sold off again. Doesn't like to respect structure. Interestingly enough, loves to swipe liquidity left and right. That's so funny. It's still bearish. Technically, USD CAD is still bearish. USD JPY, because of the war, is bullish. Hasn't broken structure yet, but it looks like it might. Once it does, it's going to extend. Probably to the upside. GU. I'm going to want to sell GU. Most likely here. Fill in the gap. Who needs to get rid of this price discrepancy? Right here. Then I will sell tomorrow, or it might happen during London. Let's look at AU. Not really interested in Euro. Let's look at Bitcoin here. A couple people that are longing Bitcoin right now. I believe it. I believe Bitcoin's going to come back to 78K. I think it's going to trap buyers, and then we're going lower. I think after we go to 78, we're going to go back to 50. We're going to go to 54. And then we're going to swipe that 50 area, 54, 52 area. See these wicks? This is what I think is going to happen. Now, if there's a catalyst, it could lead us here. Then I would buy anything under 40. 100%. All right, guys. Other than that, I mean, everything's looking pretty decent. Nvidia still looks like it's on the buy side here, which isn't bad. Apple still looks somewhat bullish. Amazon needs to fill in this gap here that we're looking at. Price discrepancy here, which looks like it's going to. I don't like that it did break structure here, but we did fill almost zone. Wow, Google just went bearish on the 2-day. What about on the weekly? Interesting. Google did go bearish on the daily. No, not yet on the daily, but on the weekly it did. Let's look at Meta. think there could be more pain for Meta here. All right, guys. Other than that, that was just my thought process here. With all the pairs, we will be trading live New York session tomorrow. So I'll see you guys. Love you guys. We'll talk to you soon. Have a good one.